Today, folks, another day, say it with me now, all-time highs. But more specifically, I want to zoom into the Canadian economy, which is in a earnings super cycle, and that is no joke. We are supposed to be in a recession. The sky is supposed to be falling, and everything the news and media has been telling you has probably hindered the performance of your accounts if you've not been doing what I've been mantraing on this channel, which is always be buying, not as financial advice. I'm just a influencer clown documenting his journey here, but hopefully this channel is a place of solitude, a place to Sherpa you into that path of true freedom, because there's nothing that's worked better than just to keep buying the damn markets, buy the highs, buy the lows. In this 15-year bull cycle, I don't know when it comes to an end, but it is the greatest bull cycle in human history. And somehow we captured the best performing Canadian broad-based ETF. I don't know how it happened, but it is, you know it well, VDI, ticker VDY, my monthly paying Canadian dividend ETF until I die, baby, which I'm up 20% now in my tax-free savings account, hitting another major milestone in this account of having over $100,000 in this ETF that has not only crushed it, but outpaced the US markets and pretty much the broader Canadian markets. If we compare it to the other favorite dividend ETFs that investors love here, like XEI, XDIV, and again, the S&P, it is up from an equity standpoint above all of them. And then even with the dividend pushing it superiorly higher, right? And if we compare it to just a broad-based Canadian ETF that isn't dividend focused, like VCE, that is just a pure market cap weighted, very similar to VOO, but representing the Canadian stocks, this one's up 21%. Again, absolutely crushing it. This one, however, gives you exposure to Shopify and all those other tech stocks that you don't get exposure to in VDY, yet it just shows you the resilience is really in the dividend part of the economy. And those dividend stocks include the precious metal sector, which we're going to talk about because it's insane with what we're seeing out of earnings right now. But if we take a look, I think we're going to start seeing a bit of a shakeup in the top 10 holdings, because right now we're starting to see gold companies like Agnico Eagle Mines work its way up the list. But if you take a look right now, Kansas Pacific Railway is the 10th largest company in Canada, but it is very closely about to be replaced by Barrick Mining. Barrick Mining is just hovering around an $89 billion market cap, whereas Kansas Pacific's right around a $90 billion market cap. And again, if precious metals keep doing what they're doing, I wouldn't be surprised if we start seeing 3 or 4 gold companies literally amass some of the top 10 weighted stocks in this country. I mean, gold, I thought the super cycle was coming to an end. I was wrong. I mean, look at this. We're at 4,200 an ounce, guys. What is going on here? If you take a look at copper, over $5 a pound, silver absolutely crushing it. And if we just kind of break it down and just zooming out on Barrick first before we look at the earnings and how those precious metal prices are driving this to new all-time highs. We are about 4% away from the last seen all-time highs back in 2011. If you've been buying these stocks through the last decade, you've been crushing it. So congrats to the gold players out there, because I don't have a significant, any kind of major skin in the game when it comes to the precious metal space. Though some of these stocks do sit within VDY, which I'm sure are working their way up the market cap weightings right now. But Barrick posted a Q3 gold production 4% higher than Q2. I told you guys what's going on right now with central banks around the world bolstering their treasuries, their gold exposure. Apparently, China wants to start backing its currency, the yuan, with gold. They're just buying it like there's no tomorrow. So I think we're in a period where these precious metal miners are aware of it, and they're doing everything they can to just balloon their production and just maximize the returns while they have the opportunity to. So they are increasing production. And again, quarter over quarter, the gold production was 4% higher, right? So they are doing what they can to get it out of the ground. And same with their copper production, which was, with plan at, 55,000 tons, in line with what they were expecting. But regardless, just take a look at these numbers, guys. Net earnings up 171%, adjusted EBITDA up 57%, arguably this century's most significant gold discovery. They're basically going to utilize this period to rebolster their balance sheet. They have plans to eliminate the vast majority of their debt, if not all of it. The company is currently sitting on about just under $50 billion in assets, with total liabilities of around $14 billion. So these are Canada's versions of tech companies right now. Again, I don't know how long this can last for. If gold can sustain these prices, guys, we are truly in some form of a new incredible renaissance in the precious metal space. And it's really nice, pairing my portfolio with Canada and the US because it de-weights the concentration risk that a lot of people have been complaining about in the S&P 500, with the top 10 stocks making up 40% of the ETF now. Never in history has that ever happened, with Nvidia being 8%. So I mean, I don't believe like just throwing all my money in the United States. Obviously we're concentrated in the US and tech, but still, like, I like diversifying, and I like the exposure to the metals and the financials and the energy stocks that we get with VDY. And let's talk about some of the energy players like Enbridge, which is not a high flying stock by any means, but it's a really interesting player in the top 10 list because, as I've said, like, VDY paired with VOO removes a lot of volatility. VDY has a lot more stability behind it. You know, there's some fast growers in there, but some of them aren't fast growing, but they're a lot more stable than the broader markets are. And I think Enbridge is a great exemplifier of a stabilizer with a really high dividend yield. You know, it's like the third or fourth largest company in Canada at about 150 billion in its market cap. This is the lifeblood of the Western world. It's the largest pipeline company in the Western world. It is the powerhouse of natural gas, the largest natural gas powerhouse company in the Western world. It is a behemoth, and you can kind of see the bloodlines that it runs throughout the world, going all the way from like Alberta all the way down to Texas for delivering oil, gas, you name it. And they're heavily involved right now in the renewable sector, which I think is important to point out. It is a major renewable play, building massive power generation for the likes of Amazon, TNT, Meta, you know, leaning into Enbridge's, you know, superior, you know, advantages in the energy and utility space, which is really great to see. And again, we're still getting growth here. It's not exceptional growth, but again, for a stabilized company where you're getting a super awesome dividend yield, it's a very reliable yield, right? I mean, if we just take a look at year to date, they did about $14.7 billion in EBITDA versus 13.49 this time last year. Doing exceptionally well here, guys. The distribution cash flow continues to remain incredibly stable, from 8.9 billion to 9.2 billion. And if you take a look at their guidance here, they're going to be in the range for EBITDA of 7 to 9%, the near-term outlook being between 2023 and 2026. So we're kind of playing within that line. They're doing an exceptional job here, even on the back of, again, lower oil prices. Typically in the world where they have lower oil prices, their liquid pipelines tend to decline a little bit, but regardless, everything else is making up for it. Gas transmission and midstream is growing. Gas distribution and storage has done exceptionally well this year. So this is a company that's usually growing in the mid, you know, single digits. Again, medium term outlook for post 2026 is expected to be around 5%. Regardless, guys, this is a very mature company that, again, I think plays a very crucial part within VDY, VCE, again, removing some of the volatility, giving you some stabilized dividends, while the other stocks can make up for some more of the growth. But beyond Enbridge, we're having a lot of earnings coming out. I mean, Hydro One is going to be posting, Manulife is going to be posting, all between tonight and tomorrow morning. Power Corporation on an utter tear, the company that owns the controlling voting rights, that over 50% of Wealthsimple, the fastest growing trading platform in Canada, only comparable to Robinhood in the United States. This stock is up 59%, luckily a holding within VDY. Thankfully, a beautiful dividend stock that even today trades for a reasonable valuation with its recent earnings. This one we're definitely going to be talking about, so consider subscribing for that. We'll maybe highlight Northland Power, an energy company that I used to hold. I got out of it at a great time. As many of you know, one of the first stocks I ever bought. We actually held this all the way up, and I actually ended up selling it, I think, around 2022, somewhere around here, just before it fell off. But a lot of investors have recognized it as a sale. They've been picking it up, and this year it's up 37% with a very nice dividend yield, being a pure play to the renewable space. We've even seen earnings out of Loblaws as of recently, and this stock is up 22%. Its recent earnings posted a growth of revenue of 4.6%, and I'm not sure what Loblaws is doing in e-commerce, but somehow their e-commerce sales increased 18%, guys. Like I said, we are in a very peculiar time in the market, and I always just want to reiterate and remind you that as negative as the media can be, you cannot trade off of that information. I hate seeing comments and the fear mongering that constantly goes on, and the reason I've been able to do so well is I mentally can combat it quite resiliently, even though I can take it in. I mean, we can look at the real estate sector is not doing that great right now. We can listen to the GDP numbers that are declining, that are likely putting us in a recession. But as I've told you time and time again, the stock market doesn't always represent the economy. And I know I see comments saying like, well, eventually it's going to impact the economy. Statistically, markets tend to bottom before a recession is even announced. And a lot of the Canadian companies are globalized, guys. A lot of these gold, precious metal companies, they have operations around the world. Enbridge is technically a Canadian and US company. So you can't just pin all of this, and especially with how reliant we are on these companies, you can't just pin them to the end of the world. A lot of these are recession proof companies, and I don't know and I can't get over on the back of lower immigration growth. Again, all this crazy, detrimented GDP numbers that the banks are doing as well as they're doing, even on the back of lower oil production, or oil, prices right now. Oil's trading at like cyclical lows right now, yet you're looking at Canadian natural resources ballooning and expanding so massively their output, making up for the lower oil prices. If oil even goes up a little bit, it is going to continue to boom the Canadian economy right now. Again, I don't know when this ends. I don't think it's sustainable. Obviously, I don't think gold prices are going to go up in perpetuity forever like they are. It's just, you have to understand it's cyclical. Precious metals could come down and oil prices could go back up. I don't know what's going to happen, and it could go on for another 5 years before we get a correction, right? The market could run 20% run up 20% before correcting 20%. I can't tell you. I'm not a psychic. All I know is I'm a long-term investor. I'm going to stay in this market. I have exposure to the greatest companies in the world, and even if the market decides to tank, guys, I'm not going to trade it, because guess what? I'm still going to have exposure to the best companies in the world, and eventually everyone's going to want to own them. It's just a matter of time. So I'll pass that question off to you. I'd love to know what you think right now of what is going on with Canadian stocks.